Let's welcome on board Daljeet Kohli as well and find out what he's making of the market right now. Daljeet, does it seem like a sustainable recovery? Kick-started a little bit on Friday and what a follow-through today?
Good afternoon, Aisha. It's difficult to say whether this is sustainable or not because ultimately market will come back to fundamentals. Say 1 or 2 days move can be because of the news flow related, event related items. We have seen that there was a big event which was intervening. So obviously market had some pre-positioning towards that, and then now there is a reaction which is in favor of the market. But more important, I think, would be for sustainability, it will be ultimately fundamentals which will drive. And unfortunately, after quite a few quarters, this quarter number was not very good. It was not very exciting across the sectors. Most of the companies, most of the sectors have shown a decline in the growth momentum. And so there could be an aberration that the quarter two was a lean quarter. There were a lot of things in between, erratic rainfall, elections, etc. So as of now, the consensus has downgraded full year estimates by very nominal 3-5%. But number of downgrades is much higher than the upgrades. So important thing to watch out will be what happens in quarter three. Going by this current situation, the asking rate in second half is much higher to maintain this growth. Now, whether the companies will be able to deliver that, whether we see that recovery, that will be a key thing to watch out. I think that is where one has to be really more inclined towards to understand whether your companies are coming back and whether this was just a temporary blip or is there a change in that growth momentum.
Daljeet, hi. Let's get in your take then on what the outlook is when it comes to earnings and how have you seen the quarters gone by going into the coming quarters? Where is it that you expect sustained momentum and where is it that you expect that there will continue to be a bit of a fallback?
See, I think consumption-related sectors, we believe that it's our hypothesis as of now that probably quarter two was a lean quarter and an aberration. It would come back probably, mainly because the festival season was in this quarter, quarter three. And not traditionally, we have seen that the quarters where there are festivals, you normally see the consumption picking up. However, important thing to note is what kind of impact this inflation, especially the urban inflation, had. The ground reality or the ground checks tell us that there was a growth deceleration there. Most people were impacted by the high inflation, and especially in the cities, in the urban areas. So we are building in an expectation that probably the rural will take up from here onwards, and rural will bridge some of that gap. Mainly because they have had positive policy momentum from the government side. There is a lot of all these Ladli Bahan Yojanas and all these Prime Minister Yojanas going on. So these things will help them get those that money, which can create some kind of consumption boom. And secondly, monsoons were good. So chances are that probably we'll see some reverse and the input costs are down. So one sector which can do well is consumption related. High-end consumption continues to do well. So that will again, we hold some of the stocks as a disclosure in our portfolio, which are related to premium cars and high-end luxury items. Then pharma and chemicals will see probably good earnings. There is a predictability factor there. But other things in these related to manufacturing, commodities, etc. I think we will have to watch out and wait for the quarter three.
Kunal, I want to get you in on the charts of some of these cap good names. Of course, L&T has been showing fair amount of leadership, but today the spur in a Siemens and a Cummins as well. What within cap goods is looking good for a buy?
So I think L&T is the strongest name so far because, we look at this on a relative basis, not just on today's price performance, but we look at this at a point where, say, from the end of September, which are the stocks which had corrected very sharply. So, for example, the likes of Cummins, the likes of Siemens, etc. These stocks had fallen somewhere in the tune of 15% to 20%. Some of them had fallen much more than 15% also. in the last 7-8 weeks of this market correction. But L&T was one of the strongest names. So when we look at this relatively, the first bottom which was made for L&T was around the 3350 odd mark. That was in the first couple of first half of the month of October. From there on, the stock formed a higher low, which was at 3500ish odd mark for L&T, and then was amongst the first few large cap names to recover and come back again above its 200-day moving average. So today, which means after this kind of a price action move, L&T is one of the strongest names so far in the cap goods space. Then it should be followed by the other stocks. I would probably believe that Cummins as well as Siemens, these are the other two names which one could look to bet on. But I believe largely that the first stock which could probably break past about the previous swing highs should be L&T, looking at the relative strength over the last 2-3 weeks.
Okay, that's the view coming in on cap goods as a space, but let's find out those BTST ideas as well. And Naresh, what is it that's looking good on the charts?
So first would be a buy on Wipro, a new 52-week higher, good momentum, stop loss at 577, target price of 600. Second is a buy on Dabur India, which has corrected a lot from the highs, has started giving a recovery in the last two sessions. Would expect this momentum to continue tomorrow as well. Stop loss at 520, target price of 525.
Kunal, what BTST trades are looking good to you?
So I'll go with a buy on ONGC with a target of 270. Stop loss could be kept at 254. And Eicher Motors is the other stock which is looking attractive. The stock trading just about that breakout point of 5,000. So buy with a target of 5250. Stop loss at 4900.
Okay, there you have it. Those are your BTST trades. Meantime, Naresh, let's get in some chart checks going then. And what's the outlook when it comes to the entire auto space? It's a mixed bag in today's trade. Some of the auto ancillaries seem to be taking the front seat, but what's looking good within the entire space?
So the leader has been Mahindra and Mahindra in terms of not seeing a large correction, but continues to hold on to the lows of the last 6 months. So on dips, Mahindra and Mahindra continues to be a buy. Second is Eicher Motors, which is in touching distance of a breakout. If you look at the last 3 to 6 months, multiple attempts around that 5,000 mark. If it sustains above 5,000, we are looking at a much bigger move in the stock going forward. So Eicher Motors and Mahindra. In terms of a dip buy, it would only be Hero MotoCorp, which has seen a good correction from 6,200 to 4,600, 4,800. So that could see a bounce back towards 5,300. But overall, the top picks would be Mahindra and Eicher Motors.
And Eicher Motors, but the fireworks today seem to be in HDFC Bank. Kunal, did you think that it's going to be a life high for HDFC Bank?
Yeah, actually, I thought maybe a week back that the stock should be hitting life highs. It's a bit late, but nevertheless, I think it's been a very good comeback for HDFC Bank. So from a point when the stock was a huge underperformer, when the entire private sector banking rally was going on, towards a point when the stock is amongst the strongest name in the heat of this market correction over the last 8-9 weeks, I think that itself tells you the kind of quality the stock holds. So I believe at current levels of 1790, 1800 approximately, the stock hitting fresh highs for itself is an indication that this could be a starting point of a major multi-month, multi-quarter up move.
Quite interesting. Daljeet, are you also bullish as much on the prospects of some of the private banking names and more the underperformers from last year, case in point being HDFC Bank actually leading the charge now?
No, actually, we are not holding any of the banks as of now. Within the financials, we have very small exposure, and that too only towards housing finance and the power financials. The two sectors where we find that valuations are attractive, and these companies do not have that kind of problem of growth as well as the asset quality. For the banks, etc., we've been holding this view that they'll have to go through a patch of dullness because of the cost of funds going up. At the same time, asset quality, because people have almost forgotten that even retail can go bad at some point of time. Last 4 or 5 years, only private sector banks have grown only on the back of retail. No corporate lending. Corporate growth was very, very small. It was mainly driven by retail. So now the retail balance sheets are heavier. And if anything untoward happens there, then we'll have to see how these things will pan out. So I think asset quality stress slightly is a cause of worry for us there. And the cost of funds is still not very conducive. And on top of that, every one of them is fighting for deposits now. So liquidity getting crushed. So all these three things actually make us a little cautious about the sector. within the sector, we have been focusing on power finance because the government has huge capex there and a lot of this new solar schemes, etc., rooftop solar, etc. That is going to give a lot benefit. And then this Prime Minister Awas Yojana, these two things I think will drive the growth for these two companies.
What a fabulous day today. Not just the index making a solid comeback back above that 24,200 level on the futures, but the way some of the PSUs and of course heavyweights like an SBI, HDFC Bank, which just hit its life high a short while back, all of them have actually participated in trade. But Daljeet, Kunal, Naresh, all of you, good to have you on the show.
If you like this video, then like, share and subscribe to ET Now.